Well, let's take a look at our market activity early on a Tuesday here. I'm Marlon Bowling with you, your tour guide to the ag commodities. Well, we started out under pressure this morning, but things are already starting to come off of their early lows. Let's take a look at our quotes provided by Bar Chart. Let's go to the corn. We have corn showing March now down just 3/4 of a cent. We're at 683 after getting just under 680 early today. Well, now we're within a penny of our high of the session. And we have new crop December corn currently only one tick lower. We're now down 1/4 of a cent at 5.89 per bushel. Meanwhile, on the soybeans, well, they've had an adventure already. We had a high last night of 15.37 1/4 and a low this morning of 15.24 1/2. Now we're at 15.33 1/4. So we're just 2 cents lower. Very choppy on the open here this morning. I think it's just whipsawing all over the place if you watch a minute-by-minute chart here. The deferreds were a little bit weaker. They were down about 5 cents. November currently is down 4.5 cents, and we're now trading at 13.63 per bushel out there on the new crop month. Now, on the wheat in Chicago, well, we have nearby March losing 2.5 cents. We're at 7.50 exactly per bushel. July is down 3.25 cents. Kansas City wheat, March down 4.5 at 8.69 1/4. And we have July down 4 3/4 cents. Spring wheat trade in Minneapolis dropping a nickel. We're at 9.16 1/2 on the March, and July down 4.5 cents. Brian Hoops joins us now. He's with Midwest Market Solutions. So very choppy market action here today. And Brian, this is the end of the month. So I wonder how much window dressing is put on at the end of January. What do you think about that?
Well, we always do seem to get some window dressing because of the end of the month and end of the quarter. However, cattle market do seem like they need to continue to try and move a little bit higher here. So I don't think we're going to see a lot of movement in the cattle. The grains, we may see some positioning, some jockeying, so to speak, as it's been more of a choppy month so far. I do think the wheat market is reacting overnight to crop condition ratings released by some of the states on a state-by-state basis. Kansas held steady, but Oklahoma, Texas, Nebraska all improved very slightly. And you really can't tell a lot in these winter wheat condition ratings during the dormancy months. But, down here where we're at, the wheat is green. We have moisture in the form of snow that's laying on the ground. And that snow, it's going to melt next week. It's going to be back into the 60s, and that's really going to improve the appearance anyway of that winter wheat that's laying there, and it's going to turn nice and green and look very good.
I did not see any overnight export sales activity posted. Did you?
No, we didn't see anything. So probably a little bit of disappointment, I think, leading to some weakness in the grain markets, especially for corn and soybeans, because the trade is hoping that China comes back out of their lunar holiday, that they're going to get some of this export business. And so far, that really hasn't been the case. We haven't seen anything, to really point towards them coming back and buying with a vengeance. They may be sitting back and waiting for this South American crop to be harvested, as Brazil's about 8% harvested. They're getting a little bit of planting delays. So that could push a little bit of business back to the U.S., but eventually that crop's going to be harvested and compete with the U.S.
When we get to the end of January and early February, isn't that typically kind of a slow period for cash grain movement?
It certainly can be, and there's still producers out there that are talking about moving some grain right now. Just from the standpoint that, they were passed into the new year, basis levels remain very strong. And if you look at the market structure, we are inverted from the standpoint that March corn and March soybeans trading 15, 16 cents higher than what it is for July. So storage is a losing proposition, especially if you're paying for storage this year. It really is a losing proposition. There's much better ways to play this market using futures and options contracts than to try and be long in the cash markets when the market is clearly telling you to sell the cash right now and then buy it cheaper with a July futures, July options contract.
Now, that is an excellent point. I'm glad you brought that up. Something everybody needs to take a look at. You have to look at the whole picture in order to protect your bottom line. All right, Brian, we'll come back in a moment. We'll open up our livestock trade right after this. As advertised, let's bring back Brian Hoops and talk about our livestock trade. Brian, on the cash cattle market, there hasn't been much going on. It seems like Maybe there's a little tendency to want to go a little bit firmer out there, but it's probably going to take another day or two before we can find out, right?
Yeah, most likely. The Packers bought late on Friday, so they don't have a real need to step in on Monday, Tuesday to buy anything. They can wait a few days here. But the futures market certainly reacted to the stronger cash trade and reacted to the big slaughter pace that we saw last week. And we're seeing some follow through buying of that. All contracts yesterday hit contract ties except for the February. And that market actually goes into delivery a week from yesterday. So options on February expire this Friday. But I expect we're going to see some strength in this cattle market, dialing in a little bit stronger cash trade. The slaughter pace that we talked about yesterday morning, 659,000 head last week, a very strong number, and we're above that so far, with Monday's kill exceeding last week's. And when we see that type of that kill type of schedule, it tells us that the Packers are going to need to buy some cattle, and the futures market is reacting to that. So I think there's probably a little bit more strength coming in this cattle market yet until we get a little bit higher, maybe another day or two, and then we kind of will stall out waiting for the cash to catch up to where the futures are anticipating it's going to be.
In the early going, it looks like we're just kind of holding our own on the live cattle futures. So maybe they're a little bit afraid of heights here. We have the April contract now down 17 at 163.17. A little bit ago it was like a nickel or a dime higher. Over on the feeder cattle side this morning, now here we're gaining. April is up $1 at 189.27 here in the early going today. The May contract up 77 cents. The corn market is narrowly mixed, so feeders are kind of doing this on their own. And on lean hogs, we're all over the board, but the intermediate months are a little bit firmer. April 15 higher, we're at 86.67, and now you have the May contract up 72 at 95.75, while the deferreds are just kind of flat. All right, well, Brian, thank you for explaining what was going on in the markets this morning. Always good to hear from you. Appreciate it. Brian Hoops of Midwest Market Solutions with us. So, Janet, we're off and running. There you go.